Good morning. Welcome to Bazaar Morning Call. It's the last day of the trading week and I'm Sonia Shenoy. With me is Nigel and Latha Venkatesh. There is volatility in this market. No two ways about that. We saw it last afternoon when the market had a sharp intraday rally and closed in favor of the bulls. This morning looks like the bulls will further tighten their grip on the market. But there's so much to talk about in the global markets as well. It's been a bit of a mixed day. We'll talk more about that. For now, the start looks well in the green. Folks, morning. Latha, morning to you.
Good morning, Sonia. I would think that the data that came yesterday backed the bulls. I mean the US GDP data. It's a Goldilocks data. Growth higher than expected, inflation lower than expected. What more can you ask? GDP growth was expected to come in the second quarter, the quarter that ended on September 30th. The number was expected to come in at 2.3. It's come in at 2.6. Now, there is a GDP deflator because, when you count the GDP amount of goods and services, you take it at today's prices, then you deflate it to the actual amount of goods and services so that you remove the price effect. That price effect, it's called by various names, they call it some chain of prices index. Basically, it's the cost of living index. If you deflate it, then that inflation comes lower than expected at 4.1. The market feared it would come at 5.3. Headline inflation is also lower than the previous reading. So for the markets, it's a very good reading. The other two things which I want to point out is there have been some senators writing to Powell asking him not to go ahead, to remind him that he also has an employment mandate, not just an inflation mandate. So yesterday, the note went from Senator John Hickenlooper, writing to Powell saying, you must consider the negative impact of raising rates. And just the day before, another Senator, Sherrod Brown, had also written to Powell. Now, the Fed chair doesn't regard these. He has a mandate and he obeys it. But it just shows the ambience. It has an important noise impact. And all this is adding to the market's thinking that while November is a 75, December, they will have to bring it down to about 50. It can't continue at 75. So all these are aiding the bulls.
Yes.
The impact of the inflation reading was very clearly seen in the bond market. Now 4 is over. It's at 3.9. And that's also leading to a slightly weaker dollar. All these are emerging market positive, India positive. The only negative, which I think you all are going to talk about in greater detail, the tech results.
Yes.
Yeah.
All of them indicating that, GDP is the lagged number. The next number will not be very good because the tech industry, tech sector companies are clearly pointing to greater slowdown. What do you say?
And every one of them, right? There's not even one big tech company that is spared. But I take your point. This morning, the Exchange Nifty is indicating that the start will be well in the green. And you know what? The positive US GDP data, the fall in the dollar index, have all led to the Dow rising for 5 straight days. So the Nasdaq is a different issue altogether, but the Dow Jones has been in the green for 5 days. Yes, tech stocks are under pressure post weak earnings. There's weak guidance from Amazon that has added to the pressure over there. In fact, in after hours trading, Amazon was down 16%. This is the biggest decline that the stock has seen since way back in 2006. And Apple has seen weaker than anticipated, iPhone revenues as well. So that's one part of the market that's not fixing itself, so to speak. But for our own market, the bulls have had a firm grip, and it looks like that grip could get tightened. One thing is for sure that the 50-day moving average of 17,500 is now a firm support for the index. We had a fabulous October series where the Nifty rallied in excess of 900 points. That's a 6% gain. And there was large buying by FIs overnight as well. Over 2,800 crores of money is what FIs bought in the cash markets. And DII sold a bit, about 1,600 crores or so. So in all likelihood, the market will start in the green. We'll take it from there. Financials have been doing very well. This week has been great for a couple of other pockets as well, including names like defense stocks, etc. So there's been a big comeback in mid-cap IT as well. So we'll keep our radar on all of these stocks. But Nigel, looks like the bulls have it even today.
Well, that's right. The bulls have it, but I'm only a little bit cautious because we're going to that 17,800, 17,850, and we're seeing a U-turn. Last 3 sessions, that's precisely what's happened. We get the highs up for you on the screen. So I think till we cross that 17,850 odd mark, then I'll be feeling a little bit better. But for the time being, the bears, they want to defend that mark. And at the start of the series, a new series today, the FI positioning is interesting. It's an absolute contrast from what they started, the October series. And remember, the October series was a good one. So they were net short that time around. Now they're net long. So I said, let's put out some data then. The last few series at the start of the series, when they are net short, in fact, if you look at the start of the October series, or you look at the start of the July series as well, they were net short. We had good series out there. However, the only change is in August when they were net long, and we had a decent series, 3.5% odd. Let's see what November throws up. At the short point, I'm a little bit more comfortable on the FI as a net short on the index, because that gives us an additional lever. Now, since that they're net long now, the institutional flows become even more important, because there's unlikely to be any kind of short covering that will play out. Now, the congestion zone is around the 17,800, 17,850, and also towards that 18,050. I say that because yesterday you had a couple of strikes that were very active. 17,800, 18,000 call between them. They added more than 40 lakh shares. But there's good support at lower levels. 17,500, 17,600, a couple of reasons out there. 17,700 put continues to get written, and the 50 DMA as well comes in out there. Now, the US Fed meet, that's scheduled for next week, and that's going to be the biggest trigger, and that's really going to set the tone for the November series itself. Because the bulls or the global equity markets, they have been factoring in some kind of cooling off, whether it's in commentary or something on those lines. The 10-year yield has cooled off, the dollar index has come back to around 110 odd, and as Latha said, a couple of senators as well have put in their vote that maybe that tightening needs to cool off a little bit. So let's see whether or not that comes off. If it's a disappointment, then we're heading down again from there. But if there is some kind of dovish commentary that comes in, that'll be rather good news. For starters, SGX Nifty is suggesting a start in the green, 17,800, 17,850, again a resistance zone.
Okay, let's see, right? We're at the upper end of the trading range. And yesterday, after so much volatility intraday, one thing is for sure, that this market is going to be quite volatile. That last hour bump up that we saw, it was exciting. It was exciting.
It was a typical expiry, Sonia, that played out. We went to 17,650, and in a matter of minutes, we were at 17,750, the intraday chart.
In the same light, that FII number should not be, assumed as actual flows. They're all adjustments for positions taken.
Yeah.
So, they have been putting in money in 3 figures, 3 digits. We shouldn't expect more than that as of now.
Yeah.
That unusual 2,000 crores is only a position adjustment.
Okay, there are also some big numbers coming through today. There's Maruti, there is Dr. Reddy's, there's Tata Power. So lots to talk about in terms of individual stocks as well. Let's do one thing. Let's kickstart the show. Our first comment comes in from Nilesh Shah of Envision Capital, who says that the earnings season so far has been very encouraging. He says it looks like inflation is peaking out in Indian corporate earnings. The outlook on the market is very positive, and he expects FPIs to resume buying in India as soon as concerns on inflation start receding. Nilesh also says that manufacturing, defense, financials and consumer stocks could continue to outperform.
Okay, money market views. Bhaskar Panda of HDFC Bank says the ECB raised interest rates by 75 basis points yesterday to tame inflation in the Eurozone, causing the euro to fall against the dollar. In US, he says expectations of a 75 basis hike is built in now, and recent US data shows a mixed bag. He adds oil prices are a tad down, but still high on global uncertainties, while the IMF has spared Asian growth estimates. Against this backdrop, Bhaskar says recent mild appreciation of the rupee is expected to halt and readjust to today's realities. He expects the dollar-rupee pair to trade in a range of 82.40 to 82.60 for the day.
And on the bonds, Bhaskar Panda says the RBI has announced an unscheduled MPC in November first week. He says some rate hike expectations are entrenched, and he expects the 10-year benchmark bond yield to consolidate in a range of 7.4 to 7.5%. The US yields have dropped, and India rate expectations have built in.
Well, we have a lot of stock-specific action as well to track for you, and we'll get to that in just a bit in our special Top 10 segment. We'll look at SBI Cards, Tata Chemicals, PNB Housing, Aditya Birla Capital, Anupam Rasayan, as well as Gokul Das Exports. They are stocks on the back of positive news flow, while you have Sun Pharma, Indus Stars, Supreme Petrochem, and Vibe Global. They are stocks that are likely to open up in the red.
Okay, well, with that, let's put all the global cues we have to an expert to tell us